If you see in FY24, Tata Motors shares were up around 215% as against a 75% gain that we have seen in Nifty Auto. Now, why this outperformance was seen in Tata Motors? Because in the start of the FY24, the management had guided for JLR EBIT margins of more than 6%. Mid-year, they upgraded that guidance to around 8%, and actually they ended FY24 with a margin of around 8.5%. So this outperformance that was seen in the JLR business led to this outperformance in the share prices. Now for FY25, if you see, the margin guidance that the management has given is flattish. They are not expecting any big uptick in margin, and hence we are seeing this kind of a downfall when it comes to the share prices of Tata Motors in trade. It's down around 8.5% or 9% in trade, and that is largely because the guidance for FY25 margin is flat at around 8.5%. However, for FY26, the management is expecting margins to expand to around 10%. On volumes, they are cautiously optimistic, and what according to brokerages could lead to an outperformance in the share prices going forward, firstly is if the management again goes ahead and upgrades the margin guidance, and second is a sharp ramp up in the EV segment in FY25 could trigger the rally in share prices going forward. Let's also listen into the editor's take that we had today on Tata Motors.
It did well because of operating leverage. It did well because of financial leverage. It did well because they had this entire value creation process which they went on to, where they wanted to extinguish the shares of DVR, and then the global business did rather well for them. How many of those triggers are likely to extend into FY20 into FY25? Not all of them, and the large part of the re-rating in the stock purely on basis of earnings, numbers, margin expansion, that is behind us. So Tata Motor has been a ranked outperformer. That kind of an outperformance is unlikely to continue. In the near term, given what is happening to the global market in terms of PV, EV taking a backseat, domestic competition is also intensifying. While Tata Motor is enjoying some degree of leadership, I guess EV re-rating for them, I think, is already over, given that EV is still a very small part of where the Tata Motor portfolio is. I don't think the stock is going to collapse beyond a point. Why? Because you know that Tata Motor, there's another trigger which is coming, and that trigger could take another 8 to 12 months, is the demerger of the entire business into CV, passenger car, and other subsidiaries. Also, there's a buzz that they are looking at reinventing some of, reorganizing some of the companies. They took Tata Tech public last year. There could be an NBFC transfer and some more companies which could go public. So stock will be in news. But based on these numbers, there is nothing in the stock which will excite momentum, but the downside also will be protected largely because of multiple triggers which are based on M&A, which are based on demerger, which actually could protect and give you downside for the stock. So I think from a massive outperformer, now the stock could become a market performer.
Well, that was the editor's take on Tata Motors. Kunal, what's your view on Tata Motors right now? After the 9% fall that we are seeing, is it coming into the buy zone or still further downside?
Well, it's still not coming to that buy zone, and typically after such kind of a sharp sell-off, we see at least 2-3 days of further correction into the stock price. But the good part is so far that the volumes have been much higher for Tata Motors as compared to the volumes which you've seen for the stock in the last 2-3 months on an average for the stock price, which means major part of the pain could be out into the stock price. It may not fall by another 10%, 9% like what we've seen today for the stock price, but possibly a residual correction of say another 3 to 5% could be something in the offing. So maybe closer to 920, 930 odd range, I think would be a very good buy zone for Tata Motors. Would be bullish on the stock price, and I think this leg of correction, traders should look at a buy on dips approach rather than a sell approach at current levels.
Okay. If you like this video, then like, share and subscribe to ET Now.